All right, everybody, let's take a look at our watch list possibilities for tomorrow here. I'm going to set up some stocks that we want to trade tomorrow. We took a couple new trades today. Market action just out of control. I mean, look at this candle today. Had this massive gap down here, tested the lows just off of 183, and then closed right back up near the highs. I don't know what's going to happen tomorrow, whether we fill this gap, or we gap down again. 181 is our next major spot of weakness to break through before we move on down much lower. We took a couple new trades today. So, everybody welcome. Put this little announcement out there. Oh boy, wow. Having technical difficulties, guys. Okay. Try that. Okay. So I'm just shutting down some programs here so I can maximize my CPU. Alright guys, we're going to start with the long scanner tomorrow. I don't suspect we'll see many setups, only 42 items triggered an alert today. We'll see if there's anything appealing in there. We got Silver Wheaton Corp that's on the scanner. This thing obviously been moving up here. It's a hedge against the market. You know, the precious metals generally are. So it's not really a swing setup here so much as it is a short-term volatility play. So we're just going to kind of plow through these here so that I can run off and get my burrito for dinner, because God knows I need my burrito. Alright, big five here. Nice big spike up, right? And then a big sell-off at resistance. And it closes a doji. So that is not a strong stock. Looking for strong stocks in this market shouldn't be too hard, right? Because as weak as the market is, there's only going to be a handful that pop up and give us an opportunity to even notice them. So, and we have stocks like Vivo here. Not really sure what the deal is with this. I don't really like the setup or the room. So, I will know the setup when I see it. Okay. Hiccups. You know, I don't know what the deal is on this Kelly A, whatever the heck it is. Let me take a look here at what it could possibly be. Oh my. Kelya. This is a recent earnings play. Let's see, they had earnings last week. Rather uneventful. And so therefore, close this, guys. not a ton of upside here. This isn't the worst looking chart I've ever seen. In this market, we're not getting a lot of amazing looking setups, so we're definitely limited to what looks the best. It's not fair that you and Mike are on there at the same time. Well, the good news is that it's recorded and you can watch them both later. Looking at the potential here for a move on KLYA, potentially over 1675 or so. We got a little bit of room here. Maybe 1685 will add some. The first target really will be probably closer down here, 1755, maybe even a little sooner. We'll probably hit some resistance along the way. Probably closer to 1750. And, maximum range of this move is 1825. And then we start getting into this big sell-off back here from last April to May. Not really an amazing setup by any means at all. But I want to have a few options tomorrow just to see what happens. Alright, so Kelly is going to be, so this is a big sideways trender that has defined room, in the range to the upside. Long entry here is over 1675. And we'll add at $17. Keep risks small. Take smaller positions. Scale into the trades. Don't jump into anything all at once here. This market is just too crazy to try that crap. First target is 1750s, and then 1825. Stop will be 1650 initially. Alright, moving on to the next here. Gold's moving up, not surprising. MTOR. It's really just looking like a reversal, potential reversal setup, but it is a perfect bear flag. This is a perfect bear flag. Liz made a comment at the end of the day saying she thought we may have a positive day in the market because she thought today was possibly short covering. Any validity to that? There's absolutely no way to tell whether it was short covering, new money coming into the market, people moving out of bonds and back into equities, if it was just a support play, longs coming in off the bench versus short covering. Like I said, look at the chart today. This is an incredibly weak chart, right? It keeps tapping this moving average here, this 20, and failing. We're testing major support here. So going all the way back to March, April of last year. So this area breaks down. We move down towards 181, and then after that, it's peace out. 2 years worth of work in the S&P. I think this is probably more of longs playing the bottom off support because it's a pretty clearly defined area than it is short covering. But every bullish move, to some degree, is going to have short covering in it. So it's not one side or the other ruling the market. I don't think that, we could pop back up. Look, the last time we had a sell-off down this level, we popped up for, a week and a half till we sold off again. It really doesn't matter which way the market moves. It doesn't have any impact on the way we trade. We look for long and short setups either way so that we're ready to take a position depending on what the market does. We have a much shorter time horizon for our trades than somebody with, a retirement account. My retirement account has taken a hit, but I have 25, 30 years, to recover, so I'm not too worried about it. The market is very cyclical. It goes up, it goes down, not in straight lines. And so I look at this as a buying opportunity long term. As far as trading goes, I don't know what's going to happen tomorrow, and it makes no difference because we're going to do a long watch list and a short bias watch list, and we'll be ready either way. But this looks like a support play to me. Nothing about this in particular screams short covering. I mean, I don't know where or what indication of that there would be. Now, if this was something, if the SPY had earnings that was coming up tomorrow and you saw this really dramatic move at the end of the day, that's probably something you could attribute to short covering. If there was a really large short interest in this particular stock and there were a lot of days to cover and you saw this big run up all day long, you could probably attribute that short covering. But this is the SPY and it's the broader market, so it's trading completely independent. All right, back to the watch list here. MTOR. This is a perfect bear flag. I don't like this setup here. You have this move down, it's the flag pull, and you got this little flag here, a little channel popping up where it's going to test this 20 moving average and more than likely fail it. If you look at it going all the way back to, let me zoom out as far as I can. So we have this little sell-off here. Once we break down below the moving averages, we're in a bearish trend. We pop up, test the 20, fail, sell off. Pop up, test the 20, pop over it, fail, sell off. Pop up, test the 20, test the 50, fail after the 200, and sell off big time. Pop back up, test the 20, fail at the 50, sell off. So I don't need to go through this, but it happens over and over and over again. So what are we doing right here? We're popping back up. We're going to test the 20. Maybe we test the 50. But more than likely, statistically speaking, if you look at the chart in the last 2 years, we're going to fail. Not a good setup. LSG, another gold company. Not touching gold right now. AKG is gold. Financials. Financials are tricky. They're harder to trade. They tend to move with the market. There's a lot of factors that influence financials. They're, like I said, they're tricky to trade. But in this case, we have this big move down here, the sell-off. I'm guessing it's probably an earnings move. Let me pull up the info on it here. Yeah. That was the earnings move down, and it looks like it put in a pretty big recovery, and it's looking to climb back up. However, in this particular chart, we have a lot of resistance we're heading into here. Doesn't mean there's not room to profit along the way. So we're looking for these areas of previous support, which are likely to become future resistance. I see a lot of resistance on this chart at $38 from back here. In this little 1, 2, 3, 4 top here, $38 was an area of support. Previous support will become resistance. I see this, especially in a weak market, having trouble getting through this $38 area, so we'll take a pass on that. CBM, that's just a nasty sell-off. I didn't look at IBB today. I'm guessing it's still selling off. Yep, IBB is still moving down. On its way down to next support. We'll see IBB take a break here. IBB looks good for, look at that, bounce right off of support from back in July of 2014. Perfect bounce off support today, present day. Just clean as can be. You go tell your fundamentalist friends that technical analysis doesn't matter. It's BS. So we got some oil and gas on there. Another bank. CSFL. Let me see here. This is a nasty, nasty chart. Very strong uptrend up until Very strong uptrend up until the earnings, or well, let's see, up until the beginning of the year, really. This thing took a dump right here after January, had a very overstated sell-off, an attempt at recovery following a good earnings event, but now it's popping back up, testing this resistance spot right about here at 1430. See if we can get over 1430, which was also resistance back in here, support through here. Previous resistance became future support. Future support will become future resistance. I think we have a chance potentially to get it on the move back up to 1485. Not a ton of range here. It only moves 60 cents at a time. It's probably not the best looking setup out there. We'll keep bebopping through these here. A lot of financials. Just nothing that I consider interesting. Yeah, previous support becomes future resistance, and previous resistance will become future support, right? So if you've taken the swing trade class, I go over this in great detail. How do we determine areas and targets on a chart? We look at spots that price action historically has reflected. That's all technical analysis is, right? It's historical observation of things that have happened previously, and extrapolating what's likely to happen going forward. So you're using past events to foretell future movement. Yeah, guys, just go up to the top where it says live streams. Click on live streams if he's broadcasting. It'll be under there. Okay, I saw MGI here. MoneyGram International, not really a good setup here. Another example. Stock's been selling off all year. Puts in a little base. An attempted bounce. Not really sure when their next earnings event is going to be. I like the price of this stock, and the earnings are coming up in 3 days. So again, we could see some short covering, coming up here in the next few days. But there's really not a clean chart here that tells us what is the highest probability move here. What's the setup? If everything goes in favor of this trade, where is this stock going? This is not a clean setup. This is not something that you're going to find. You're going to find a lot of traders looking at. Yeah, WRLD, big gapper here, right? Probably earnings. Pretty nasty looking chart. It is on the watch, or it is on the scanner. Had this nice high relative volume move up today. Came right up, tapped the 20 EMA, and stopped right there. So let's put a top in right there. Why did this stock stop right here at $33.30? Well, because it's an area of previous support, right? Back through here for the entire last few days of October. 33.30 was a very supporting area for the stock while it was trading above it. Well, this is previous support, and it's now acting as future resistance. There's also a little bit of support in through here. We have these little spikes down below, but the closes are over this particular area. And I bet if I zoom out, yep, sure enough, there you go, right here. Back from August of 2015, this whole 33.30 area was support. Previous support is becoming future resistance. Basics of technical analysis. So if this was something we wanted to look at for a possible long, it would need to be over this 33.40 area. Potentially for a move. I'm trying to find where it's likely to put in a move to here. Probably even a little bit. Ooh. So this particular stock only trades about 100,000, 130,000 volume a day. Shouldn't waste my time looking at that. That's one of the first things I always want to see is the volume. I don't want to be one of a couple hundred people trading the stock. $30 stock, I might take 2,000 shares of this, but because there's only probably a couple hundred people in the whole world trading the stock, it's going to be me versus them and the stupid things that they do and the messed up spreads that, light volume stocks create. So knowing that now, I'll probably take a pass on that. GLT, this is another one that's not so hot. Oops, let me do this. It says earnings tomorrow. So that's out of play. Can't play anything on the day of earnings. OSUR. This is a name that has been in play before. Pretty clear resistance here at $7. Rejected it back on December 18th. Okay, so today this stock hit a high of 646. Stopped right there on the dime. This area is acting as resistance for whatever reason. Well, one, it's just under the $0.50, right? $0.50 and whole dollars are areas of mental support and resistance. So we know a lot of retail traders like those even round numbers, and they put their stops right there. So, or their orders right here. So a lot of orders at 650, right under that mark. We see that as resistance from back here in December. We see that as support from back here for a little while in April. And resistance even before that, for a day or two here in May, and then back here support in March of 2014. So this area has been in play more or less, somewhere around the $0.50 for a while. So this is probably worth keeping an eye on over the $0.50. It's got a lot of volume in it. The relative volume is way up. Earnings aren't for a little while. This is not necessarily the best setup here, but it is a gapper that's holding this support right here along the 200 moving average. It's putting in these huge moves, which has really increased its ATR over the last few days. But I think we have room here back to $7. So 50 cents in a trade on a $6 stock, that's a lot of room. It's just under 10%. So, I like the room here. I would only risk 25 cents on this trade. I think $7 test is probably, probably likely. If we can get out over 650, there's really not a ton in the way to $7. So this is what I would call a B quality setup. Not the best setup I've ever seen. But after a day like today, I don't expect there to be many long biased stocks setting up for a decent trade opportunity. OSUR is coming off of strong earnings, and it is holding the gap, so we do like to see that. So OSUR, it's an earnings winner with nice looking for the move back to 7. Long is over 650 for me. I'll be watching it right there with a stop at 625. Okay, pretty straightforward setup. Just going to flip through a couple more charts here. A lot of gold. This thing's extended. OVAS just literally making 2-year lows today. Not interested. Gold, yeah, we're getting a lot of gold on here. Gold's making an attempt to be relevant again. Don't let it fool you. Crocs. You know, I won't trade this company surely because I don't want to see them in public. I think they're hideous. If you wear Crocs, I'm not sorry. They are hideous. Alright, here's a good looking setup. Relatively. It's only $1 stock. Not a lot of room here, 15 cents a range. And only 240,000 shares. So you can't really go heavy on this one because it trades so thin and it really isn't going to put in a big move. So you would rather take more size on a smaller moving stock. But since it's so thin, it kind of prohibits you from doing that. But we have a nice looking kind of a bullish flag here. We have this big move up, consolidation period sideways, looking for the next leg up back toward 150 or 156 or so, but not in the right price range for us right now. Good old GoPro. GoPro, I've traded this thing back. I traded it on the day it IPO'd. I traded it off $100. I traded it around the $40 area last summer. But as of right now, this thing has too much bad news coming out to be relevant. It is capable of some big moves and a lot of volume. But it's not quite set up yet. What I'm going to do is I would love to see this thing fill the gap here. I'd really get some confidence if this thing could get up towards the $13 area. This is where I'd want to be a buyer over this area, because right now it's just trading sideways. I want to see it close over at least the moving average here, showing that there's some bullish propensity, and I want to see a nice bullish setup where shorts might look to cover as the stock moves into the gap here. So that's what I'd keep on watch for GoPro. All right, I'm going to flip to the short side scans here. BXLT, that looks and sounds like a sandwich, but it looks like a sell-off. 1, 2, 3, 4, 5 massive red days in a row here. You can see it kind of starts to accelerate the move to the downside. You can see the volume increasing to the upside. This is absolutely what we want, but we want to find it in day 1 of the move, not day 1, 2, 3, 4, 5. So looking for that move that's going to give us the 3 to 5 day continuation for that 5 to 15%. All right, I'm not really interested in Biotech. I think Biotech bounces here. Biotech has been just absolutely destroyed, along with many other areas. But I think Biotech's going to bounce. I think we'll see a lot of these names bounce with it. Okay, this is not a very clean setup for me. You can see we've already got 3 days in a row. We've sold off here, and if we go from the high at 105 to the low at 87, I mean, this is like a 20-point sell-off in 3 days, so not something we can really act on responsibly. Not interested. Another one here, just the thing just falling off, just dropping huge. It's oil and gas is Valero, just dropping probably about 10% there over the last couple days. Big bear flag here. This thing, right? Big sell-off. An attempt to cover, or attempt to recover, retraces to the 20 EMA. Tested, failed. And finally, the buyers gave up. Shorts came in and said, oh, you're done for. Push this thing back down. So these are all good moves, but they're kind of post-move. They're not ideal for an entry at the moment. This is an interesting setup here. Hog. I've traded Hog with some success in the past. I do like Hog. Don't confuse that for liking to go hogging. Two very different things. But everybody had that buddy in college, if you know what I mean. Okay, so 38.50 is probably where I would look for a breakdown on this. Definitely has room here back to potentially, like I'd say, a maximum here to be the low of this move. 36.36. This is a very dangerous area. Let's check on the earnings. Hog just had their earnings. And Hog could definitely see the $36 area. Could do it in one day here. I'd look for this initial entry under 39. I'd consider adding to it just about 38.50 mark. And it's today's low, tap 38.50. So I'd add for the push even further down. Keep this one. This is not a bad look. If only for a day or two. Might be one that I take overnight and look to cover the next day. So Hog, we're going to keep on short watch. So we're going to keep this on short watch for breakdown and move back to the lows following post-earnings weakness. Short entry on Hog is under 39 with an add at 38.50. It's very critical. We scale into these trades. Our stop will be 39.25, right? Because when we get into this trade, we're going to have an average at about 38.75. Don't want to give it more than 50 cents a room. It's really not necessary. Target is going to be 36.36. Range lows. It's ambitious, but I'm looking to take percent every 3 to 5%. Not necessarily waiting until that bottom tick. So that's something to keep in mind. We're taking profits along the way. We're scaling into weakness and we're scaling out on weakness, right? When we're short, when we're long, we're scaling into strength and we're scaling out into strength. All right, moving down here. Looking for that next good setup here. I will let you know when I see it. I'm just trying to find stuff that's not already at the lows, that's not extended, something that maybe has retraced and is looking to resume trend, maybe a dead cat bounce we can pick up on, something like that. But these are all at the lows. See, this is a good one here. Polaris. I do like their hardware, but a weak chart is a weak chart. This thing is downtrending. We have the first test of the 20 EMA since back here in November of 2015. And now we're breaking down back below it. Looks like we just had an earnings event here. Let me PII. Take a look at the earnings here. It did down. It was a little sell-off, hit a low of 67.8. And then it's put in a 6-day move to the upside where it failed over the 20s. So this thing closed just at the 20 EMA. This is definitely a wide moving stock. It has a $4 ATR. The low on this one is 77.76. That's a little far away. It's a little wide moving for my taste, for my comfort. So I'll keep this one in the back of my mind. If I can't find another, this might be something I have to turn to, but it is not right now. Zion Bank. Not really a fan of the setup. Again, it's just at the lows here. These are 2-year lows. Not something we have a lot to fall back on technically, so I'm sure we can find something else. Another one making 2-year lows. Okay, blue. Good old blue. Everybody likes blue here. This one's pretty wild. You know, one thing that worries me about blue, while I like the chart here, I remember trading this last year. One day it was at, whatever it was, $40, and then the next day it was at $80 or $90. gapped up on some news, ran all the way up to $200, and now it's back down to 45. This is definitely a high risk setup here. It's definitely a gap risk, but this is also a very good setup for potential in a very weak market. So what we have here is a lot of room to the downside, back down to 30, I don't know, 38.75 or so. The short entry here is going to be under the lows, right? So just under 44.50. This thing right here has not broken above the 20 EMA, has not had a bullish opportunity to present itself until 2 days ago, which it's failed and is now trading back under the 20. So the downtrend has resumed. I like this for a move back to the lows, 38.75. Short entry is going to be under 44.50, assuming 44.30, excuse me. Assuming IBB is weak, it's going to help. So we're going to put blue here, good old blue, on short watch for a move back to the range lows near 38.75. Short entry is definitely under 44.30. A stop at 44.50. Look at this one, $1.20. It's got almost a $5 ATR. Take a few hundred shares here and see if we can't get a clean move to the downside here. Realistically, though, our first target is going to be right around here at 41.75, somewhere in that vicinity. This one will have wide spreads, and you'll have to have your orders out ahead of time, trying to get filled on the move. It's not going to work. You got to have your orders out ahead of time on a stock like blue. Know your areas. Know that we're probably going to see a little pause here at 42 bucks, between 42 and 41.75. So have your order somewhere in that vicinity. That's a point and a half, 2 points, 2.5 points from our entry. So if you have 500 shares, 2.5 points, it should be over $1,000. Definitely consider locking some up, and then adjusting your stop to break even, and keeping the rest of your size on for the move down to our big target. All right, going to flip through a few more charts here. We have 4 names for tomorrow. This is different. This is a very big bull flag here, right? Sort of. You hit this big move up here, this little flag period. Where it's sold off. It's trying to get through these moving averages. I'm not so sure that this is kind of an indecisive. This is an in-betweener. This could go either way. And it's got a $7 ATR. Can you imagine that? I mean, this thing trades $7 in range each day. That's great for day trading, but for swing trading, I mean, it'll be tough to hold on to. Oops. Oil and gas, more banks, REITs, oil and gas, REITs, consumer electronic. Oh, this is Harman, but it's down at the lows, 2-year lows. Not interested. So I think we got through the best setups. Look at NVDA here. This was one I had on short watch last week. It was on short watch under 27.40, or was it 27.87? I don't remember. Either way, since it sold off, it's down here at 25 bucks. That was a good one. ATR, average true range. It's this indicator you see in the bottom right corner. It's also this yellow line you see overlaid on top of my volume histogram. Average true range is the tick range in which the stock will move in a day. So it's a 14-day average standard, and what it does is it tells you how much range a stock will move intraday. So on average, so if it's $1.70, that means that the stock has $1.70 range each candle for the daily chart. So that means that it could pop up $1, sells off $1, then it drops 70 cents. And that's $1.70, right? Or it could do $5 one day and 50 cents the next day and $3 one day and then $2 the next, and you take an average of all the ranges in the different candles over the last 14 days and you find out how much the stock is going to move. So this is very helpful in risk management because it allows us to better focus and calculate the size of our position in the trade. If we know a stock has a $10 ATR, for example, that means it has the potential to move from $0 to $10 and back to zero in one day. We just know it's going to put in a $10 big candle on average. That means that we probably don't want to go into it with 10,000 shares, right? Conversely, if we know a stock only moves 5 to 10 cents on average, we can take a much bigger position because generally speaking, it's going to move a lot less, and we can capitalize on smaller moves with bigger size. So it's all about risk management, and that's why it's important to understand your ATR. You can also understand, it also helps you understand when you're looking at targets and you know that you have a stock that you're buying at $10 and your target is $11.50 and the stock has a 50-cent ATR, you know that it might take 3 days to hit that target of $11.50. It'd be 10 to 10.50, 10.50 to 11, then 11 to 11.50 on average, right? Nothing is exact, but it helps you understand that you're not going to go from $10 to $11.50 in one day absent some sort of catalyst or some sort of news that comes out. You know that it's going to take you about 3 days of a trend, worth of trend, because it has a 50-cent ATR to get to your target. So you got to set up, where you're going to take your profits at along the way. ATR is a very powerful tool. It does help in day trading, but specifically for swing trading, it plays a very large role. It's very important to understand. Because for me, it helps determine how much size I'm taking in a trade. It's one of the factors I look at. And also, when I'm looking at where I'm going to take profits at, I see support here, but I know that the ATR is probably going to peter out before that, so I want to take some off maybe a little bit sooner than waiting until I get to support or resistance. Yeah, sure. I've been trading for about 10, 11 years now. The last 4 full-time. If you go to warriortrading.com / I think it's team or instructors, you can read my bio, my full bio there. I come out of the college world. Went to college for physics. I worked for the government for a while. I went into financial advising for a while and started trading about 10 years ago. I had a great mentor who was an options trader and a dentist. He was my hunting partner and taught me a lot about trading and got me really interested in it, and I never looked back since. So I started managing my own 401ks and I have a self-directed IRA, but I started managing one, and I've never stopped. I've only kept going forward. Lost a lot of money, made a lot of mistakes, but ultimately got me to where I am today. So that answers your question on ATR. We have our 4 stocks that we're on watch. I'm going to put those out on Twitter and StockTwits. If you guys don't already, you can follow me at Swing Warrior on Twitter and at Swing Warrior on StockTwits. As always, if you have any questions that I didn't get to here, you can email me, jeff@warriortrading.com. I'd be happy to answer any of your questions and chat with you guys about that stuff. If you're a member, email will go out tonight with all the watch list details, entries, exits, targets, things like that. And other than that, keep your head down. It's going to be a choppy week. The SPY is testing, as I said earlier. Oops. I typed it in the wrong window there. Sorry, guys. The SPY is testing a very key support area here. We're testing 2-year lows. We're close to testing 2-year lows. So if we get down here to the 181 area, and that fails, we have a long way to fall. We're definitely going to be in bear market mode for quite a while. Let me zoom out on this E-signal chart here. It's a little easier to see. Let me throw up, where's that 181 at? Oops. Alright, so here is the major support area. Here's where we're at right here. Let me get an arrow so y'all can see this really clearly. Here's where we're at right here. Okay, here's major support area, this blue line. If that area fails, let me zoom out. Next stop for the S&P is probably going to be conceivably God damn it. Why? Conceivably down at the 173 area. So there is some micro support in through the 177 area. Let me zoom back in here, make it a little easier to see this, guys. So we're at this blue line. We're just above this blue line right now here at the green arrow. If this blue line fails, we have a short move down to this intermediate support at 177 and then longer term support at 173. So like I said, it's going to be volatile and choppy. We really want to see him move up off of this area. But it doesn't matter. You know, I mean, long-term people who are, your retirement's going to take a hit. If you're looking to retire in the next year or the next 6 months, you're probably going to get screwed. But for the rest of us, we have a little bit of time to recover. And so average down in your positions long-term, put more money into your retirement. Now is a good buying opportunity. Buy the dips. Looking to, you know, make new highs here. If we can get back over the 215 area, you know, we'll be trending strong again. But I don't think that's going to happen anytime soon. I suspect we probably move lower for now. But like I said, for the short-term traders, the swing traders, the day traders, we don't care. We have positions ready to go long or short. So we'll see what the market gives us. Let me look at XBI for you real quick. XBI, oh my, that's ugly. So this is the Biotech spider here. This is very similar to what IBB is doing, which is the NASDAQ sector ETF for biotech. Interesting to note though, IBB has taken a support, just like the SPY has taken support today, or it bounced off of support today. Doesn't mean it won't break, but at least for today it held support. IBB tested this 244 area, which coincidentally is also support from back in here in July of 2014. So it's also at support right now. I'm guessing if I look at XBI, it's probably going to be the same way. I'm sure there's a support area. Okay, perfect. So it's testing this $44, $45 area. Also support from back in July 14th. So it's going to be the same thing as the IBB. It's at support right now. It's in a massive, massive downtrend. Very, very weak. It could trade sideways. It could recover and start moving back up, or it could continue selling off. Either way, I'd be very careful about entering long on a setup like this because you could get caught in a dead cat bounce. I think that, like I said, I think the markets are weaker than they are strong right now, and I would get out of the way of anything that looks like this to the long side, but I wouldn't necessarily jump in it to the short side because it is at long-term support. So I would wait for confirmation here to see what happens. I would like to see us get back up here to one of the moving averages to give us some sort of semblance of normalcy, but whether or not that happens, I don't know. Okay, you're welcome. LABU, that's just a play on biotech. You know, it's a leveraged biotech ETF here. I don't even know if it's leveraged, is it? I don't know, it doesn't look leveraged. But it's not really in play, so until biotech bounces, and then you can certainly trade LABU to the long side. But until it's a confirmed bounce, I wouldn't touch any of these stocks or ETFs. Always be careful swing trading ETFs too, especially if they're leveraged, because you will suffer leverage ETF decay. You guys can Google it, read about it. It's kind of similar to time decay on options. They're not good for holding more than a day or two, but generally any leverage ETF is designed for day trading purposes, not for long-term holds. But this is the same thing. Biotech is not in play unless it's an individual stock with a catalyst of some sort or a different setup. But if you're looking to trade the sector directly through an ETF, it is not in play until it either breaks down through support, moves lower, it's a good short. If it bounces here and gets back to the moving average, I think it's going to be a dead cat bounce, but I don't know. Either way, it's very dangerous at this area, and it's very indecisive because it is at that critical support area. Long on ED. This is Consolidated Edison. This to me would not be a long here because it is a chase at all-time highs, right? So in this particular market, So one of the beautiful things about technical analysis is that we are able to use historical data to help give us an idea of where something might go to in the future. And that's why we draw these lines on these charts and we find these patterns, and we're able to kind of guesstimate what's likely to happen based on what's happened historically. When a stock is trading at its all-time highs, or even a lot of times 52-week highs, it becomes very unpredictable. And this one, while coming up here and making a very nice move up, is somewhat extended. It's put in probably, let's see, 1, 2, 3, 4, 5, 6 green days in a row. It's been a fairly big move to the upside, and it is at all-time highs. And could it go higher? Yeah, it could. But without any historical data saying how high it can go, I don't know whether or not to buy it here. There's nothing indicating, that it's a strong buy, and so I'd probably wait for it to consolidate and make some sort of a flag pattern, consolidation or sideways for a while under a certain area. Then I'd look to buy the breakout over the top of that, because this is a strong chart in a very weak market. I do like the chart. I just wish I would have gotten in it sooner or known about it sooner, type of thing. Also, keep in mind, earnings are coming up February 18th in just 10 days from now. So if this thing has bad earnings like it did last time, it'll drop on you 10, 15 points. And so even with a couple hundred shares, that's a lot of risk. So I'd probably wait for it to flag out and wait for earnings. And if it's strong earnings, then I would jump in, assuming the chart setup was a little less extended than this. But that's a nice looking setup. All right, guys, I will be back tomorrow evening with my watch list for tomorrow night. Make sure you guys follow this channel. You'll get an email notification when I go live, and I will be able to answer more questions for you then. We'll see what happens in the markets tomorrow. Until then, guys, manage your risk. And if you have any questions, give me an email at jeff@warriortrading.com. I'm going to go eat a burrito. You guys have a good night.